Assumable mortgages, that's the buzzword on the streets right now. I've received several phone calls this week alone from buyers saying they just want to look for a property that the property has an assumable mortgage, meaning the seller's mortgage can be assumed by the buyer. Is this a great idea? Oh, sure, it can be, because the seller could have an interest rate on their mortgage of 2, 3, 4%, where current interest rates are nowhere near that. The thing that people fail to remember is the difference between the balance on the seller's mortgage and the purchase price the buyer has to come up with out of pocket. So let's say, for example, a seller has a home and they owe $100,000 on the mortgage, and the sales price of their home is $250,000. Where's that $150,000 difference going to come from? That's coming from the buyer. So a buyer that wants to buy a home with an assumable mortgage 9 times out of 10 has to come up with a significant amount of money out of their pocket. Another thing to remember is servicers of these loans that are assumable, which usually are FHA, VA, and USDA loans. But the servicers, they're not familiar with assumptions. We haven't done them in 100 years, so the closing could take longer. I'm hearing the assumption process with the servicer of the loan for the new buyer is anywhere from 45 to 60 days. So if you're purchasing a home or want to purchase a home with an assumable mortgage for the seller, make sure you have a long closing date. If you have any questions, please feel free to reach out to me. Like me, follow me, DM me, phone call, text, whatever you want to do. I hope to hear from you. And P.S. Remember, I do mortgages.